What's going on, everybody? It's Sasha, your licensed real estate market expert here in Charlotte. Hope you're all doing well. Welcome back to the channel and welcome back for another monthly market report for the month of June. Keep in mind, even though it's June right now, all the information that we go over is going to be from the month of May. The reason we do this is we want an entire month of data compiled together so we have the most accurate information once we're reviewing this stuff. So in regards to the market, it is rough. New listings are down, pending sales are down, days on market are up, inventory is down, average sales price is the highest that it's ever been, but the median sales price is actually going down. So we're going to get into all of the stats, but I just want to give you a little bit of my take and what I'm seeing right now in the month of June as far as how the real estate market is working. So I've been working a ton in the Ballantyne area, Waxhaw, Huntersville, and just generally the South Charlotte area, a lot of the South Charlotte zip codes and things like that. And every single thing that I've been looking at in those areas mentioned has been selling extremely fast, and a lot of it has been in multiple offer situations. I just had one of my clients that's helping his son move to the Charlotte area, and he's actually an agent in Vegas. He told me that Vegas, their market is down 20% from their all-time highs. He was telling me that right now in some of the nicest areas in Vegas, you can find a very nice 3-4 bedroom home for $450,000, when at the peak of their market, that same exact house in that same exact neighborhood was $600,000. Even he was telling me the Charlotte market is almost like an anomaly. He's like, I don't know what it is. It honestly doesn't seem to be slowing down. And right now, kind of what I'm experiencing, it's not slowing down at all. We're having an inventory crisis. The rates are up. Even if you have extremely good credit, you're going to be in the high sixes, in the low sevens. And there was a house that popped up in the market that I wanted to go look at. And the quickest way to shut my wife down before we decide to make an irrational decision is to pull up the mortgage calculator. This house we were looking at, after a $120,000 down payment, not including closing costs, our monthly mortgage with utilities and everything would be between $4,500 to $4,700 a month. And that is crazy. Right now, the only people that are buying in this market are people that are very well off. That's not to say that it's impossible to find a home, but right now, the struggle we're having with inventory mixed with the high prices, mixed with the high rates is giving us so much trouble. The high rates should be pushing downward pressure on the prices. However, our low inventory is pushing higher pressure for the prices to go up. So they're literally having to battle each other, and none of them is essentially backing down. That's why right now we're just kind of in a stagnant place in the market, but still, again, relative to the supply, the demand is still outweighing it. That's why we're seeing so much of this activity. As of right now, guys, I do not see this changing anytime soon unless something drastic happens. I do not see it changing anytime soon. And if you're somebody out there right now that's submitting offers actively in the month of June or July, just know that you're most likely going to be paying the highest prices of the year if you're doing so. I tend to guide my clients and let them know, hey, if you want to buy something, stay ready, have your pre-approval, and look for stuff that is not essentially cookie cutter, something that doesn't come up so often. There's so many neighborhoods that are extremely similar, same floor plans, same square footage, same size backyards that come on the market often. And if you're somebody that's looking for something that tends to come on the market more often than not, in my own opinion, I think it might be a good idea to wait as we get a little bit later in the year if you don't want to pay the high prices that we are now. But with all that being said, let's hop into these stats. And again, these stats are here to help you make the best informed decision for yourself and for your family. As always, if there's anything I can ever do for you, call, text, or email me anytime. All my contact information is right here and also linked down below. Now let's go ahead and hop into the stats with new listings. So in regards to new listings, we had 4,568 new listings in the month of May, and that is a 25.4% decrease from this time last year. Due to these rates, any seller I feel like that has a 5% or lower interest rate is just not putting their house on the market, which is what is causing the inventory crisis that we're having right now. Take a look at the 2 years previous. In 2021, we had a 10.3% increase in new listings. And then in 22, we had a 5.9% increase in listings in the month of May. And now we're down 25%, which right now at this real estate time, it is supposed to be the peak of our selling season. June and July is peak inventory and peak prices, but we're not having peak inventory. In regards to pending sales, we had 4,329 home sales pending in the month of May, and that is a 13.1% decrease from this time last year. But as I mentioned, the buyer demand is still outweighing the inventory that we have. New listings down 25%, buyer demand down 13.1%. So you can see that there's still a lot more demand than there is homes for sale. Next up, we have the average sales price, which came in at just above $483,000, and that is a 4.6% increase from this time last year, and it's the highest average sales price than we have ever had. Take a look at the 2 other years prior. In 2021, it was a 27.2% increase, 22, 17.1% increase, and this time a 4.6% increase. So we're done with the double digits of home price increases. However, this is still the highest they've ever been, and we're going to jump into the median price point really quickly, but I just want to mention we've seen a ton of activity at the higher price point sections. A lot of houses above $700,000-800,000 have been hitting the market lately, and that also is causing the average sales price to go up. Now let's hop into the median sales price, which came in at $385,000 even, and that is a 2% decrease from this time last year. A couple of months ago, I made a video with us seeing our first ever negative in the median sales price, and if you recall, that was 0.02% decrease, but now we're actually at a 2% decrease. Charlotte has not seen decreases in these median price points in roughly about 10 years or so. That's non-seasonal. So last year, our peak market in June 22, the median sales price was $400,000, and in February of 23, it was $355,000. So we had roughly about an 11% decline from our all-time highs as far as that goes. If this trend continues, if these prices continue to see this decline as far as the median sales price, when it comes November, December, January, February, it could be very highly likely that we see the median price point at $340,000 to $345,000 come those months. If we see something else drastic happen in the real estate market, they could be hitting that goal of what I thought we were going to see at $325,000 as our median price point going down from our all-time highs. For some reason, based off the stats, based off the activity, I'm not seeing very high price decreases. I'm not seeing a market crash or anything like that. But for some reason in my gut, I still think we're going to see 15 to 20% declines from our all-time highs. But right now, according to the stats, that's not what we're seeing. Now let's talk about days on market, which came in at 34, and that is just under 143% increase from this time last year. Houses are sitting on the market longer than before. However, as I mentioned, the desirable zip codes, the desirable neighborhoods, desirable school districts, those are still selling relatively quickly, and we're seeing a lot of multiple offers still happening. However, take a look at 21 and 22. We were at negative 52% in 21 and negative 18% in 22, and now we're up 143% as far as days on market. Right now, it's tough to see the correlation. On average, the more days on market, the better it is for buyers. The less days on market, the better it is for sellers. However, right now, it's still a competitive market, so these numbers are kind of clashing and they essentially don't make sense. It's very similar to the high interest rates putting pressure for the prices to come down, and then low inventory putting pressure on prices to come up. Right now, it's very tough to see the correlation, but there are a lot of houses out there that are sitting a lot longer than they were before, and there's still deals to be had out there, guys. Don't let some of these numbers fool you. There's still opportunities out there to find. Now let's talk about the percentage of the original list price received, which came in at 98%. That is a 4.7% decrease from this time last year. Essentially what this stat is telling you is that you can expect to pay 2% below the listed price on average. Keep that in mind. That's on average. Every single property is going to be different as far as the interest goes. But make sure you do your due diligence. Make sure that you pull a comparable report and see how quickly homes are selling for in certain neighborhoods. See how much they sold for in certain neighborhoods. See if they sold below the listed price, above the listed price, and so forth, so you make the right decision and don't miss out on a good opportunity trying to offer 2% lower than the listed price just because this stat says so. Last but not least is the months of inventory, which came in at 1.3. And you would be surprised to hear that that is a 44.4% increase from this time last year. Our inventory is up almost 45%, but we are still at extremely low inventory. This market is so ridiculous. I do not know what needs to happen, but I think the rates coming back down is going to be a double-edged sword. If the rates tend to come down in the mid-5s and or below 5s, we could see buyers pour into the market, have the real estate prices go skyrocketing again, and or if the rates come down to those levels, we can see a lot more sellers feel a lot more comfortable putting their house on the market, selling it, and then actually being able to buy a new home at a relatively good price and good monthly mortgage payment. Make sure you guys keep an eye on this market. Make sure you're subscribed to the channel and call, text, or email me if there's anything I can ever do for you. I'll catch you on the next one. Take care. Bye.